Hello, my name is Dean Malone. I'm the developer of the D.O.T.S method. Over the next few minutes, I'm going to share with you why hundreds of traders trade the D.O.T.S method. But before I do that, I think it's only fair that you know a little bit about me. I'm a registered broker and a commodity trading advisor, having been interviewed by CNBC, Reuters, CNN, Wall Street Journal, and others. Since 2002, I've trained tens of thousands how to trade the Forex market. In 2004, I developed a trend momentum trading model known as Synergy, which continues to be traded by thousands of traders around the globe. Over the past few years, I've been intrigued by the increasing use of algorithms on Wall Street. Algorithms are a set of instructions and computations used to perform a set of functions based upon inputs of data. Simply put, algorithms are used by financial institutions to monitor the market for patterns to trade in a variety of ways. After hundreds of hours of research, I found a specific pattern, a pattern that repeats itself day after day that is solely based on price. It's a rather complex algorithm similar to what Wall Street has been using for years. However, the idea is simple. Compare the past to the present to determine possibly the future outcome. As a matter of fact, one can compare trading dots to that of a weather forecaster determining tomorrow's weather with a degree of probability. The weather forecaster compares historical weather patterns to current weather conditions and designs a model based on the possibility that the weather will do as it's done before given similar conditions. Like a weather forecast, the D.O.T.S algorithm compares historical price movement to current price conditions and identifies future price levels with a certain degree of probability. I'm going to show you this as we go through this presentation. In a nutshell, I found in my own trading and that of hundreds of other traders, the D.O.T.S algorithm provides a significant way to improve trading for all traders. So let's jump in, take a look at what D.O.T.S is and why hundreds of traders have added D.O.T.S to their daily trading. If you think back to your childhood, you might have remembered connecting dots to reveal a picture, whether that picture was the picture of a hat, a clown's face, or something else. I've found, as adults, we connect dots to reveal the big picture. Especially as traders, we have a tendency to connect dots. And from a historical perspective, when we look at the dots on a chart, what we'll find is that some of these dots represent the daily open, the daily low, the daily high, and the daily close. But what do some of these other dots represent if you look at the daily trading intraday? What are these other dots and what do they represent? They can represent the buy entry, a buy target number 1, a buy target number 2, a sell entry. As a matter of fact, in this case, we've seen the market move down, then push back up, and then flatten out. It can't seem to go much higher and looks like it's going to roll over down to a sell target number 1, potentially down to a sell target number 2. Any good trading system worth its merit is not done yet though. It includes a buy stop loss for going long and a sell stop loss for going short. Ask yourself, when considering any trading model, you should have entries, targets if the market moves in your favor, and exits or stop loss levels if the market moves against your position. These specific steps are inherent to any good trading model. So now that we've identified from a historical perspective what these levels were, where do we go from here? What was inquired of me by traders that I've known over the years, and what I started researching with what Wall Street was doing with multiple algorithms, what I found was that the problem is we don't know the dots or these price levels at the start of the day. Well, I'm here to tell you with the D.O.T.S method, the daily open trading system, that all changes. It gives you the opportunity to know per a trading session the buy entry level, the buy target number 1, the buy target number 2, and the buy stop loss, as well as identifying the sell entry, the sell target number 1, the sell target number 2, and the sell stop loss with some degree of probability day after day after day. Also, we look at the market expanding and contracting for the day as well as for different trading sessions. You can trade the DOTS method based on the Broker's Daily Open, the Australian Open, the Tokyo Open, the Midnight New York Open, the European Open, London Open, and the New York Open. So you can literally trade the market based upon where you live in the world and based upon the sessions that you prefer to trade. We've also taken the DOTS method and designed a number of selectable options. You have a session display, trend direction, average daily range, previous high and previous low, a clock display that displays over 4 clocks, a bid-ask spread, level settings, and text settings. But more than anything else, what traders want is audible pop-up alerts, letting them know that the market is setting up near a buy entry or sell entry level. Let's take a closer look at what DOTS looks like on a chart. As we see the DOTS method applied to a chart, you'll see a display with the trade session, the average daily range, the trend, and the spread. You'll also see calculated levels that start at the open of the day or open of that trading session that you're trading. Also, we've included the previous high and the previous low. And we've included the average daily range, high and low levels. So all in all, oftentimes I have traders ask me, why trade with DOTS? Well, what I've found over the years in trading and training traders is that most traders lack 4 things. They lack a clear method. They lack disciplined approach. They lack realistic expectations. And furthermore, they lack trade management. The beauty of the DOTS method is that it provides a way for all traders to satisfy these 4 traits that are characteristic of a successful trader, all 4 in a standalone indicator. So you'll get a clear method. We'll go into that in more detail. You have a disciplined approach. There are realistic expectations because the algorithm is calculating the potential movement based upon what the market has done and most likely will do based upon current price conditions. And furthermore comes trade management, knowing where to exit a trade if it starts going against you, or exiting a trade as the market moves in your favor. So what are some more reasons why traders choose to trade the DOTS method? Well, pretty simply, it's a roadmap of the market, where to enter and where to exit. As you can see in this illustration, from the left to the right, the price started moving up and it actually moved and hit the buy entry level, continued moving up to the buy target number 1. Then the market reversed, moved back down, crossed over the sell entry level, and then proceeded on down to the sell target number 2 level. And make note, is it not interesting that price moves up to a level or down to a level and settles at that level? And the interesting thing is that you knew these levels at the open of the session. That's the beautiful thing about the DOTS. It's already calculated high probable targets for you at the start of the session. All you need to do is prepare to trade and look at other factors that may affect your trade. Another thing within the DOTS method is the average daily range high and average daily range low. Now, why would we have that in there? It's because it gives you the opportunity to literally trade the tops and bottoms of the market. The market has a tendency to move within a cycle, and professional traders around the globe understand that typically price will stay within its average trading range, whether that is on a daily model or on a weekly model or even on a monthly model. In this case, we've seen that the market moved down and literally hit the average daily range low, turned around and moved up and settled near the average daily range high. This gives you the opportunity to identify that extreme level as to where the market most likely will move and where the market may bounce off from, giving that opportunity to trade back towards the open of the day. Furthermore, DOTS gives you the opportunity to trade intraday support and resistance levels, identifying the previous session high and the previous session low. In this case, you can see that the market literally moved down to the previous session low and then turned around and went right up to and hit the previous session high. And now look at this situation. The market literally went beyond the sell target number 2 level within dots. But knowing where that session low was, we could then stay into our trade and potentially trade to that session low level. Another thing that I found that many traders like is the fact that dots adds value to a particular trading model or template they've already designed. It displays in the right margin of price, so not to interfere with your trading model. Another benefit to traders is that DOTS works on all Metatrader 4 platforms. So regardless of the broker that you're trading through, DOTS can be applied to that platform. But all in all, the best reason why traders choose to trade with DOTS is results. In just one day of trading, I'm going to walk you through some trades. In this situation, we had the Aussie dollar move down from the open and hit the sell target number 1 for 21 pips. In the euro dollar, we see that the market actually reversed on us, stopped us out with a loss, but then continued to move on and settled near another target level. So in this case, one loss, one winner for a 9 pip take. Now this doesn't include spread and any transaction cost. Another trade. This was a beautiful trade with the dollar CAD. You can see that the market moved down and hit the sell target number 2 level, reversed, pushed up to the buy target number 2 level, and we end up with one long and one short trade for 74 pips. We're not done yet. One more trade here where the market literally moved up, broke the buy entry level, and pushed all the way up to the buy target number 2 for another 32 pips. And so what do we end up with? We have one day of trading, only trading 4 pairs, the Aussie dollar, the euro dollar, the dollar CAD, and the dollar Swiss, trading the New York Open at 8 a.m. Eastern, and just simply trading the entries, exits, and targets as defined by the DOTS method indicator, and it results in 136 pips, not including spread and any transaction costs. However, for the skeptics out there that think, well, you just picked a great day to trade, Dean, well, I want to give you some time-tested results. The DOTS algorithm has been around for nearly 3 years, and it continues to perform. Take a look at some of these time-tested results. In 2012, we began tracking the DOTS based upon trading one buy order and one sell order per session on 5 currencies: the euro dollar, pound dollar, dollar Swiss, Aussie dollar, and the euro yen. Take a look at these results. You can see that it averaged about 200 to 250 pips for the Australian Open session and the European Open session. And suppose you were to trade both sessions, you could see the average pips per month and what could have been attained on a monthly basis. Well, take a look at these results and let's compare them to 2013. In 2013, we added the US Open and began tracking DOTS again based upon one buy order and one sell order. We're simply basing this on, did the market hit a buy entry and move to a buy target level, or did it hit the stop loss? We record the number of pips. Same thing if the market hit the sell entry and moved to the sell target or moved to the sell stop loss. Notice in this case that we stay within that range on average about 200 to 250 pips on average per pair per session over this period of time. And again, look at the number of average total pips if you traded these pairs. Now in this case, we added the dollar yen. Now let's take a look at 2014. In 2014, take a look. Again, interestingly, the DOTS method results in about 200 to 250 pips on average per pair, trading one buy order and one sell order per session. And if you're an active trader, you know that there's a lot more opportunities generally during a session than just one buy order and one sell order. But that was what we based our tracking of the DOTS and based our results on what it did. Now, your results may vary, and these are based upon end-of-day historical perspective. I often get folks that say, well, that looks pretty good, but I want better. Do you really want better DOTS results? When we introduced DOTS, we thought that a number of traders out there had their model that was working just fine, and that the DOTS will let them know of potential targets to trade to. What we found was the majority of traders really don't have a successful trading model, one that they continue to use again and again and again. Many traders tend to hop, skip, and jump from trading model to trading model. And so regardless of what indicator folks would put with the dots, they didn't seem to have consistency and didn't seem to be congruent. And traders need consistency. They need a clear method and they need a disciplined approach. So what we heard from one of our clients who was doing quite well with the dots, his name is Sonny. Sonny introduced us to the Guppy multiple moving averages. And he was showing us fantastic results. And he commented to me one day saying, Dean, dots and the Guppy multiple moving averages are like peanut butter and jelly. They're a perfect match. They work so well together, giving you proper setups in the direction of the market. Let's take a look. In this case right here, we see that the New Zealand dollar had a sell entry, but the market at the sell entry level, it turns and market moves up and stops us out. When it does reverse, it does push up there and hit the buy target number 2 level. So we end up with one loser, the short, being stopped out, and one winner. However, what if I was to tell you that there's a way to avoid some of those losers in the market? Because oftentimes, just knowing which trade to trade and which trade set up not to trade, that oftentimes makes the difference in our trading results. Let's take a look. When you apply the Guppy multiple moving averages to the chart, you can see that the Guppy multiple moving averages, the long-term moving averages, are moving up. There's no sell trade. We only trade with the long-term Guppy multiple moving averages. So in this case, we see that price comes down, hits into those long-term Guppy multiple moving averages, knowing that we don't have a trade right here. Then the market bounces up, bounces off the long-term Guppy multiple moving averages, and now we have a qualified trade in the direction of the long-term direction that the institutional traders are moving towards. They're looking for a continual move up. You trade along with the institutional traders, and more times than not, you can hit some decent targets. So we end up here with one trade instead of two, and our trading results were better from only a plus 7 pips to now 26 pips. So when you look at the DOTS Guppy setup compared to just trading the dots actively based upon one buy order and one sell order just hitting the levels, you can see that in 2013 our results proved to be 10% better. Well, over this past year we've had some great opportunities in the marketplace because in 2014 the results using the DOTS Guppy method, applying the Guppy multiple moving averages to dots and trading in the direction of the Guppy multiple moving averages, we improved from 10% to 23% in our trading results based upon end-of-day historical trading. Now again, your results may vary, and these results don't include slippage, transaction costs, and spread. But needless to say, would you not be interested in a tool that could provide you what you've seen already and then improve it even further by simply using the DOTS Guppy trade strategy? Now that you've seen some historical results of trading with the dots, let's hear from what some traders have to say about trading with dots. Matthew writes, long story short, received dots today, simple installation, very easy execution of trades, netted 125 pips over 4 pairs, paid for itself on the first day and then some. Do you think I'm happy? 6 trades for 228 pips between last night's Asian session and New York session. I'm done for the day. The best quality of the DOTS Guppy trade is if you can't find a setup with the majors, just keep scrolling through the charts. From Anthony. Brian K. writes, I'm having incredible good luck with the system. I set alarms and monitored the trades. You scored a home run with this system. And Andrew writes, all I can say is wow. So many dots buy signals firing off in the European session, I just didn't know which way to look. And probably one of the best comments I've ever received about dots is this. From Gary, he writes, this indicator is some of the best money I've spent in Forex. And if you're like me, you've probably spent thousands of dollars on seminars and different webinars and gurus telling you that this is the way it's going to work. And what I found in my own trading is you have to trade what your beliefs are and what your conceptions and thoughts are about the marketplace. But having a tool that does a lot of the algorithmic work for you based solely on price, that tool doesn't care what your beliefs are or what your preconceived ideas are. It simply looks at price, considers current market price activity based upon historical price patterns, looking at the market expanding or contracting, giving you potential entry levels and target levels to trade to, all in one indicator at the open of a session. So what do you get with DOTS? You get the DOTS method indicator that comes with buy entries and exits and targets, sell entries, sell exits and targets, selectable trading sessions, average daily range levels, previous high-low levels, and the Guppy multiple moving averages is built into the DOTS indicator. Furthermore, you get certain trade strategies, the DOTS Guppy trade strategy, the ADR trade where you trade tops and bottoms of the market as shown in this illustration, the high-low trade, a support resistance intraday levels type of trade, and a specialized trade that was developed by actually a client of DOTS known as the J-hook strategy. And I have to tell you, it's one of my favorite trade strategies because it gives you better odds and better money management as you trade the DOTS method. And then you have the DOTS trade entry checklist, and we also include money management setups. But I'm not done yet. I want to include some bonus items because as a trader and a coach of traders, I want to make sure that you have all the tools and the support to get you started using the DOTS model. So we're going to include live training as a bonus, video tutorials, technical support, and furthermore, you're going to get a 30-day free trial of the DOTS Trade Room where we not only trade the trade strategies I just spoke of, but we also have 4 exclusive trade strategies that we trade in the DOTS Trade Room. I've been in a trade room for 7 years. I've seen what works and what doesn't work. And what I found what works best is when we have clear methods to trade, we have a disciplined approach, and we have traders who really do care about other traders and willing to participate. So we have a great group of traders in the DOTS Trade Room. As a matter of fact, one of the traders in the trade room, Rick from Chicago, wrote this. For anyone that's new in the room, I've been in here for 1 month. Didn't know what to expect and not sure of Dean's system. Right now, I'm up over 500 pips in this room listening to Dean and other traders and what he teaches. Dean has made a believer out of me, and I love this system. And I know that some of you reading this may be a bit skeptical about this quote. The interesting thing is this is a quote from Rick and continues to be a very active participant in the room. So all in all, you get the DOTS method indicator, DOTS trading strategies, live training, video tutorials, technical support, and in the next 30 days, you get to join me and a group of great traders in the DOTS Trade Room and learn firsthand. So not only do you get the indicator and the strategies and the know-how, I want to make sure you know how to apply it so that you have a clear method to trade, you have a disciplined approach, you have realistic expectations, and you have the proper trade management to reach your goals in trading. If you like what you've seen, then I recommend get started today. Click on the link below and add the DOTS method to your trading. You'll be pleasantly surprised how the market moves to the DOTS levels and you can profit from it. This is D. Malone with CompassFX. Thank you for your time. I look forward to trading with you in the DOTS Trade Room and hearing from you how well the DOTS method is working for you. Have a great day.